Okay, so this is capital markets and yung topic natin, interest rates and their role in finance. This is second out of 5 videos about this topic, okay? So types of interest, the terms interest and interest rate are commonly used in mathematics, accounting, finance, and in business. In particular, in relation to lending and borrowing. Okay, so you always have two parties here. You have the depositors or the investors, the creditors, and then you have the borrowers, okay, the ones who need the money. So interest is the amount paid in addition to the principal for the use of the money. Okay, so yung principal naman, that's the amount of money that you borrowed. So essentially, you really need to pay it back. And then the interest is the additional, which is your payment for using the money. Interest rate refers to the percentage of the principal, that is the ratio of the interest and the principal. So normally, let's say 12% annually. Okay, so if you borrowed 1 million pesos and the interest rate is 12% for 1 year, so that means you need to pay 120,000 for that 1 year. Okay, so if you're going to pay that back in 1 year, so at the end of that year, you need to pay a total of 1,120,000. Okay. But the amount you borrowed is only 1 million. Alright? Interest rate is often expressed as an annual percentage, although it could also be on a per month, per quarter, or per day basis. Interest rates often change as a result of inflation. So, the norm is that it's expressed in, annual terms. So, kapag sinabing 12%, understood yun na 12% for 1 year. But there are other financial institutions, let's say pawn shops, since normally ang kanilang credit terms ay mas maikli, let's say 90 days or 180 days, yung kanilang interest rates are normally expressed in months. Okay, so let's say 1% per month or 2% per month or 3% per month. Okay, kasi short term lang siya. So 3% per month, let's say 90 days. So for the 3-month period, the total is 9%. Okay, and based siya dun sa amount na inutang ng tao. Okay? So, meron siya example dito. If a borrower borrows 1,000 and pays 1,100 upon repayment, yung difference na 100 between the total amount paid, 1,1, and the amount borrowed, 1,000, is the interest. So, yung rate nun, edi 100 over the principal na 1,000. So, 10%. Okay? 0.10 in decimal form or 10%. Of course, there are several types of interest rates. Meron tayong tinatawag na real, nominal, effective, annual, and so on. Some of these will be discussed the latter part, okay? Yung differences between the various types of rates, such as nominal and real, are based on several key economic factors. But while these technical variables may seem trivial to a layperson, minsan kasi maliit lang naman yung amount, so it's insignificant, walang material effect. But in the case of, businesses na malaking amount yung inuutang nila, and in that sense, malaking amount din yung interest na binabayaran nila. So, it could be a significant difference, okay? Lending institutions and retailers have been taking advantage of the public's general ignorance of these distinctions to rake in hundreds of billions of pesos over the years. Understanding the differences between these various types of interest will therefore redound to the benefit of consumers, borrowers, and investors. Now, share ko lang, okay? Diba during this pandemic, nauso yung mga cash lending apps. And I want to check some of them. And normally, ang pinapakita lang nila dun sa kanilang ads or yung presentation nila is that, let's say if you borrow 10,000 pesos, ang babayaran mo lang ay 10,800. So, you might be thinking na 800 lang yung interest. Pero hindi. Ang mangyayari kasi pag umutang ka nung 10,000, hindi 10,000 yung matatanggap mo. Ang matatanggap mo lang, let's say, ay 8,500. Okay? So, saan napunta yung 1,500? It could be, advanced interest or yung processing fees nila, mga ganyan. Okay? So, essentially, 8,500 yung natanggap mo, pero ang babayaran mo at the end of the period is 10,800. Okay? So, hindi lang talaga 800 yung interest pala na babayaran mo. Okay? So, yung 800, that would be your nominal interest, pero ang real interest mo doon would be from 8,500 to 10,800. Okay? So, yung iba, medyo, unang tingin, nakakainganyo, di ba? 10,000, tapos 10,800 lang yung babayaran mo. So, parang maliit yung interest rate, di ba? Pero, when you realize na matatanggap mo lang pala ay 8,500, so, doon mo na malalaman na, napakalaki pala talaga nung interest. Okay? But it's not really interest kasi nga, some of it, they would call it processing fee or something else. Okay? So, ayun. Example lang naman. Where are we? Nominal interest rate na tayo, ha? As discussed under the demand for and velocity of money, the opportunity cost of money, and as a result, the price of money is the nominal interest rate. So, yung nominal interest rate, simplest type of interest rate. It is the stated interest rate of a given bond or loan. Diba kung ano yung nakalagay doon, yun na yun. This type of interest rate is referred to as the coupon rate for bonds and other fixed income investments or loans granted by financial institutions. So, kunwari, nakalagay dun sa promissory note. Normally, promissory note ang tawag dun sa document, kapag mangungutang ka sa bangko. Let's say 10% or 12%. Okay? Kung ano yung nakastate na interest rate doon, yun yung nominal interest rate. Okay? But as we all know, that's not the real interest rate. Okay? Kasi dun sa real interest rate, kino-consider na doon yung discounted ba, yung proceeds na matatanggap mo, may processing fee ka ba na babayaran, ganyan. Okay? Alright, continuing on. The nominal interest rate is, in essence, the actual monetary price that borrowers pay to lenders to use their money. If the nominal rate on the loan is 10%, the borrowers can expect to pay 10 pesos of interest for every 100 pesos loaned to them. Okay? Continuation yan, dito sa kabila. Wait lang. Ayan. Yung kasunod, real interest rate. Ito naman yung, it is so named because it states the real rate that the lender or investor receives or a borrower pays after considering inflation. Ayan, so another consideration din pala yung inflation. Real interest rate is the interest rate that is adjusted for expected changes in the price level to accurately reflect the true cost of borrowing. So it is more accurately defined by the Fisher equation, named after Irving Fisher. So nominal rate, you have your interest rate plus the expected rate of inflation. Tapos yung real interest rate naman, nominal rate minus the expected rate of inflation. Normally, tawag dito, yung real interest rate is mas mababa compared to nominal rate. Okay? Ang perspective ata na tinitingnan dito is on the part of investors. Okay? Kasi normally, kapag yung real interest rate, on the part kasi ng borrowers, syempre kapag mas mababa yung, dapat mas mataas ang real interest rate, diba? Pero on the part of the investors, mas mababa yung real interest rate compared to nominal rate kasi nga yung inflation, yung purchasing power ng pera na pinahiram nila is maaring bumaba over time. Normally, bumababa because of the inflation. Okay? Yung binanggit ko kanina na mas mataas dapat yung real interest compared to nominal on the perspective siya ng borrowers. Kasi nga, aside from yung nominal interest, merong mga other considerations like yung processing fee, may iba ka pa kasing babayaran before you're able to get the money, and sometimes discounted din yung proceeds na matatanggap mo. Okay? So, itong example dito is from the perspective of the investor. Okay? So, assuming the nominal interest rate is 8% and the expected rise in the price level is 3%, then the real interest is only 5%. Okay? Kasi mas bumaba yung real interest rate. Kasi nga, hindi mo nagamit yung pera. Ibang tao ang gumamit. Okay? So, let's say, ang natanggap mo na interest rate is 8%, pero considering the effect of inflation, ang real value lang niya or real interest rate is only 5%. Okay? Mas mababa yung natanggap mo na interest. If the expected inflation rate is higher than the nominal rate, it is better to spend the money now because it will just lose its value. If the inflation rate exceeds the nominal rate, sayang, the real interest rate becomes negative. Ibig sabihin, mas maganda kung ikaw na lang yung gumastos ng pera kaysa pinahiram mo pa sa ibang tao. Okay? So, for example, a bond with a 3% nominal rate we'll have a real interest rate of -1 if the inflation rate is 4%. Okay? If the inflation rate is lower than the nominal rate, the real interest rate is positive pa rin. Okay? If the inflation rate is higher than the nominal rate, edi negative yung real interest rate. If instead of inflation, there is deflation naman, pag deflation, edi, decreasing prices, real rates will exceed the nominal rates because instead of deducting inflation, we add the deflation rate to the nominal rate. So, kapag deflation, ganito naman yung formula. Real interest equals the nominal rate plus the deflation rate. Okay? Example, nominal rate 6%, deflation rate is 2%. The real interest rate would be 8%. Okay? Generally, the inflation rate moves as nominal interest rates moves over time, making the real interest rates become stable over longer periods of time. Therefore, investors who are in it for the long run may be able to more accurately assess their investment returns on an inflation-adjusted basis in contrast with investors who only make short-term investments. Therefore, investing in long-term bonds gives the investors a more accurate assessment of his returns than an investor who invests in short-term marketable securities. Okay? So, yan. So, perspective nga ng investor yung dinidiscuss natin dito. Okay? So, on the part ng investor, syempre, mas gusto mo ay mas mataas ang returns. And when you look at the nominal or real interest rates, if you're going to base your decisions on interest rates, okay, sabihin mo, mag-invest ba ako dito or hindi, acceptable na ba itong ganitong interest rate or not, then it's much better to look at the real interest rate compared to nominal. Knowing the difference between nominal and real rates enables investors and borrowers to make better decisions about their loans and investments. A loan with a frequent compounding periods will be more expensive than one that compounds annually. Okay? A bond that only pays a 1% real interest rate may not be worth the investor's time if they seek to grow their assets over time. Okay, masyadong mababa. These rates are effectively reveal the true return, kaya nga real, that will be posted by a fixed income investment and the true cost of borrowing for an individual or business. Okay? Investors who seek protection from inflation in the fixed income arena can look to instruments such as Treasury inflation protective securities, a similar instrument to index bonds, which pays an interest rate that is indexed to inflation. Okay? In addition, mutual funds invest in bonds, mortgages, and senior secured loans that pay floating interest rates that periodically adjust with current rates. So, merong ganung mga type ng investments. You have your fixed income investments. Kahit ano mangyari sa market, yun yung percentage na babayaran sa'yo. So, in a way, hindi siya ganun kagandahan. Compared mo dun sa mga investments na yung interest nila or yung yield would depend on the actual market rates. Okay? So, mas maganda yun. Okay? Except kapag bumaba ng masyado. Kasi kapag bumaba ng masyado, di mababa rin matatanggap mo. Pero pag tumataas siya, tumataas din yung matatanggap mo. Okay? So, again, it will depend on the economic situation kung alin ang mas better between fixed income and flexible securities. Okay? Next, we have fixed interest rate. A fixed interest rate means that the interest rate that you will be charged over the term of your loan will not change, no matter how high or how low the market may drive interest rates. Your payment will remain the same on your last payment as it was on your first payment. Okay, so ito naman from the perspective of the borrower. Okay, mga nangungutang. So, ito, depending on what's your agreement or negotiation with the financial institution, anong napag-usapan nyo? Mas prefer mo ba ang fixed interest rate or variable interest rate? Again, it would depend on the market condition. Kasi, kunwari, if the market is, let's say, inflation, let's say the monetary policy reacts in a way that they increase the interest rates. So, on the part of the borrower, mas gusto niya yung fixed interest rate kasi let's say yung fixed interest niya is 8%. Tumaas man yung interest na, yung current prevailing market interest rate, let's say 12% or 10%, ang babayaran niya is yun parang 8% kasi yun yung fixed interest rate na napagkasunduan niya nila nung financial institution, right? Pero kung yung prevailing market interest rate naman is bumaba, instead of 8%, mas mababa pa siya, let's say 6 or 4%. So, ang babayaran pa rin ni borrower is 8%. Okay? So, depending on the situation, it could be good or it could be bad. Okay? So, yung pagde-decide nito, edi sariling assessment na lang ng borrower and ano yung prediction niya for the future of the market. Okay? Yung variable interest rate naman, floating rate, nakadepende to kung ano yung magiging prevailing market rate na i-impose ng BSP or i-implement nung bangko na pinag-utangan or financial institution. Okay? The interest you are charged changes as whatever index your loan is based on changes. Loans can be based on the rate of the 1-year T-bill or the prime lending rate, among other factors. Variable rates consist of two components, an index plus a credit-based margin determined by the lender. Okay? The starting rate on a variable rate loan is usually lower than the rate on a fixed rate loan, normally. The index rate will vary over time based on economic conditions. The index can be the rate on T-bills, the prime lending rates of banks, or the LIBOR. LIBOR stands for London Interbank Offered Rate. It is the rate of interest at which banks offer to lend money to one another, okay, in the wholesale money markets in London. It is a standard financial index used in the U.S. capital markets, and the rate is reported every day in the Wall Street Journal. So yung margin, however, is locked in at the time of credit approval, meaning it will not change until the loan is paid off. So you have yung pinakang base, yung index, tapos yung margin is yun yung napagkakasunduan nyo na from the beginning of the loan or the borrowing. For example, if someone took out a loan with a variable rate of LIBOR plus 5%, and LIBOR was at 3.58 at the time they took out the loan, then their variable rate would have been 8.58%. When the LIBOR rate changed to 1.82, the variable rate then changed to 6.82. Bumaba, ano? The 5% margin remains constant throughout. Only the LIBOR index changes based on market conditions. Pero pag tumaas to, adi mas tataas din yung interest rate na babayaran niya. Okay, next we have difference between interest rates and rates of return. So, ito perspective ng investor kasi sila naman yung mayroong return na inaasahan from their investments. Okay? Sometimes interest rate and rate of returns are interchangeably used. However, there is a big distinction between the two. Take note that both interest and capital gain are a percentage of the principal. The interest rate is the measurement of interest income, yields, dividend, income, or profit directly derived from the investment. The capital gain is the increase in value. Okay? For example, stock market tayo. Di ba yung, kunwari, beginning of the year, bumili ka ng stock, ang market price na is 100. At the end of the year, ang naging market price na niya is 120. Okay? So, yung interest rate doon, measurement of interest income, yields, and dividend income or profit directly derived from the investment. So, for example, during the year, from the number of shares na hawak mo, let's say naka-receive ka ng 5 pesos per share. Okay? So, ang interest rate mo doon would be the 5 pesos, the dividend, kasi yung dividend, natanggap mo na, na income. So, 5 over 100, 5%. Okay? Tapos yung capital gain, increase in the value. So, yun yung from 100 na binili mo, naging 120 yung kanyang market value at the end of the year. So, 20 is the capital gain, increase in value from 100 to 120. So, 20. Okay? ROR is generally applied to financial assets, rates of return. To illustrate, investment in bonds, 10,000 pesos, interest rate or coupon rate of 10%. And the market value at the end of the year after acquisition of 11,000. Meaning, you can sell it for that much in the market. Interest rate is computed as R equals L over P. R is the interest rate, this is I. I is the interest received for the period or coupon payment, and then P is the principal or price of the bond. So, in our example, 1,000, 10% of 10,000. So, 1,000 over The investment in bonds, 10,000. So 10% is the interest rate. Okay, it's normally the coupon rate already. Capital gain is computed as market value at the end, so 11,000 minus the principal, 10,000. So 1,000 is the difference. And then you have your divided by the principal, 10,000 as well. So it's also 10%, right? Nagkataon lang na parehong 10% ito, pero normally they're not the same, okay? Nagkataon lang. There's a possibility of that. Alright. Therefore, ROR equals the return plus the capital gain equals 10% plus 10% is 20%. So yung total na ROR, rate of return is 20%. Okay? So yun. Magkasama yung nakuha niya na dividend saka yung increase in the market value of the instrument. Okay? So 20%. The first part in the computation of rate of return is the current yield, natanggap mo na ano. And the second part is the rate of capital gain or the change in the security's price relative to the initial purchase in the illustration. And the 10% is the interest rate, the other 10% is the capital gain. So in total, the total yield or rate of return is 20%. Okay? If the bond has decreased in value from 10,000 to 9,000, the second part would give us negative 10. Okay? So yung capital gain niya is negative 10%. So yung rate of return niya, 10% yung natanggap niya na interest, tapos negative 10 yung capital gain or decrease in market value. So yung total rate of return is essentially 0. Okay? Pero in that particular scenario lang naman yan. The investor earned 10% interest but lost 10% due to the decrease in the value of the bonds of 10%. Pero you have to note na itong negative 10%, hanggat hindi niya binebenta yung security, hindi pa niya to nare-realize, okay? Or hindi pa niya to nasa-suffer talaga. Hindi niya pa nasa-suffer yung loss, okay? Pero kung let's say inintay niya na tumaas ulit yung value ng bonds, maging 10,000 man lang ulit, edi 0 yung kanyang capital gain. So, ROR niya is yung sa interest na 10%. Okay? Or intayin niya na tumaas ulit, maging 11,000. So, yun. Rate of return niya is magiging 20%. Alright? What the investor earned in terms of interest was entirely lost due to decrease in value. Okay, in that particular scenario. The return on a bond will not always equal the interest rate of the bond. So again, nagkataon lang yan. Even for a bond whose current yield is an accurate measure of the yield to maturity, the return can differ substantially from the interest rate, especially if there are large fluctuations in the price of the bond that produce substantial capital gains or losses. Key findings, which are generally true of all bonds according to Mishkin, are modified as follows. The only bond which return equals the initial yield to maturity is one which time to maturity is the same as the holding period, meaning the investor holds the bond to maturity. Okay, kumbaga hindi niya benenta sa financial market from before maturity. Okay, inintay niya talaga na mag-mature yung security and yung mismong issuer ang magbabayad ng principal and the interest. Okay. A rise in interest rate is associated with a fall in bond prices, resulting in capital losses in bonds which terms to maturity are longer than the holding period, meaning the investor holds a bond and sells the same prior to maturity. Okay, kapag tumaas yung interest rate. Okay? Kapag tumaas yung interest rates, the reason kaya bumababa yung bond prices, kasi nga, tumaas yung interest rate. Okay? Mas malaki na kasi yung matatanggap nila na return on that. Alright? Resulting in capital losses, okay, kasi bumaba yung bond prices, which terms to maturity are longer than the holding period. Kaya nangyayari, edi yung mga investors, binibenta nila yung security before the maturity. The more distant a bond's maturity, the greater the size of the percentage price change associated with an interest rate change. So, mas matagal yung maturity, di ba, longer period. Siyempre, there are a lot of changes that could happen in the market. So, ayan, greater yung size ng percentage change in price. The more distant a bond's maturity, the lower the rate of return that occurs as a result of the increase in the interest rate. Okay, mas mababa yung rate of return. Kasi yung, di ba, yung interest rate affected by inflation. Di ba? Even though a bond has a substantial initial interest rate, its return can turn out to be negative if interest rate rises. When interest rates rise, the market value of financial assets generally fall. Okay, so you don't want the interest rates to go very high. Alright, interest rates and their role in finance. Ito yung pinakang point ng discussion. Finance deals with funds, and funds generally denote money. Okay, so di ba yung businesses, they could be funded two ways. Either yung mga owners magbigay ng sarili ng pera to the business, or yung businesses mangutang from creditors, mga lenders, or mga financial institutions. Okay, so ang tawag doon kasi financing, di ba? Funding. So, finance. The earnings on money lent and the cost of money borrowed are expressed as a percentage of the principal amount of money lent or borrowed, called interest rate. So again, dalawang perspective, yung nangutang ay di meron silang interest rate na babayaran. So cost of borrowing yon. Tapos yung nagpautang, meron silang interest rate na matatanggap. Earnings nila yon sa pagpapahiram nila nung pera. Okay? Based on our discussion on the interrelationship among interest rate, money demand, money velocity, and prices, it is evident that interest rates play a major role in finance. Since finance is a major concern of monetary policy, we have also seen the BSP uses interest rate as the primary instrument of monetary control. Okay? So again, if they want to control the amount of money supply in the market, they could increase or decrease the interest rate. Okay? Remember that the official interest rate is the reverse repo rate, or RP, or the overnight borrowing rate, which is the borrowing rate on the reserve requirement for banks set by the BSP. Okay, I paused the video because the dogs are barking mad again, so let's continue. Changes in interest rates have implications for a multitude of phenomena in the business and economic world. The level of investment spending, the level of consumer expenditures, redistribution of wealth between borrowers and lenders, and prices of financial securities are among the ones affected by any change in the interest rates. Okay, they either go with the direction of the interest rate or go against it. That is, they have a direct relationship or an inverse relationship. Okay, so let's digest this first. Okay. So, di ba kapag interest rates, they go up, normally businesses and borrowers, they're not enticed to borrow money. So, if they don't borrow money, saan yung level of investment spending nila is bababa, di ba? Kasi instead of expanding their operations or, hiring more people, they won't do that if they are unable to borrow money from the financial institutions. Okay? Tapos, on the part naman ng consumer expenditures, again, mga individuals, let's say mga salaried employees. So, kapag tumaas din yung interest rate, minsan nagdadalawang isip sila kung mangungutang pa ba sila or hindi. Diba? Magsa-salary loan pa ba ako or wag na lang. Okay? And because of that, bumababa din yung consumer expenditures kapag mataas ang interest rate. Okay? Redistribution of wealth between borrowers and lenders. Since kapag mataas ang interest rates, normally, the investors, of course, they want to put their money into the financial intermediaries or investments kasi nga mataas yung interest rate. But the problem there is that on the other side, umuunti yung mga tao or businesses na gustong mangutang ng pera kasi masyadong mataas yung interest, right? In that sense, pwede magkaroon ng redistribution of wealth kapag, let's say, pag mataas kasi yung rates, favorable on the part of the investors, pero kapag bumaba siya, favorable on the part of the borrowers. Okay, so depending on the economic situation, pwede siyang, it could, mean different things for the two different parties. Okay, tapos syempre kapag, tawag dito, kapag nakapangutang itong mga businesses from the financial intermediaries, so they can use that to expand their operations. They can use that to provide employment to more people, and if that happens, edi, mas maraming tao ang makikinabang, maraming tao magkakatrabaho, and mas madami yung, magiging economic transactions in the market. So, in that sense, parang, nagkaroon na rin ng redistribution of wealth. Okay? Prices of financial securities, ayan, depending on the interest rate then, nagre-react din yung prices ng financial securities. As we've discussed earlier, yung sa bonds, kapag tumataas ang interest rates, yung prices ng bonds normally ay bumabagsak. Okay? Continuing on, central banks use interest rates to control money supply, demand for money, reserve requirements, and other monetary tools to maintain a healthy and stable economy. The multitude of yields at any given time is accounted for by the difference in default risk, yung risk na hindi makapagbayad yung borrower, tax considerations, magkano yung interest rate to be charged on the interest payments, marketability and liquidity on the part of securities. Meron ba existing market for this, or buyers and sellers available, and then of course yung liquidity, convertibility to cash, maturity period, gaano katagal, short-term ba to or long-term, and the like. Okay, interest rates on government securities, because they are almost default-free, are usually used as benchmark yields for all other securities. Okay, sila yung minimum. Other issuers, hindi pwedeng charge ng mas mababa pa dun sa government-issued securities. Kasi kumbaga, sila yung pinakamababa kasi sila yung pinaka-safe nga na investment. Alright? Interest rates and the economy. Interest rates have the following important roles in the economy. So, ano yun? First, ensure the current savings will flow into investment to promote economic growth. Okay? So, yung mga tao, although they don't invest their money, kapag yung pera nila is nilagay nila sa bangko as savings, okay, maliit yung natatanggap nilang, interest deposit. But what's important is that yung pera nila, nilagay nila sa bangko para itong mga bangko maipautang dun sa nangangailangan ng funds and normally businesses. And itong mga businesses, pag nagkaroon sila ng, money na na-borrow from financial institutions, then they can use that to operate more, to expand, or to improve their operations, to hire more people. So in that sense, it would promote economic growth. Okay? Unlike kapag yung pera is hawak mo lang sa bahay nyo, nakalagay lang sa piggy bank or nakasingit sa libro, that will not flow into investments. Okay? So if you really have to save your money, dalhin sa bank pa din. Okay? Secondly, ration the available supply of credit to provide loanable funds to those investment projects with the highest expected returns. Okay? So, di ba, yung normally mga banks, syempre, meron din lang naman silang limited amount of money that they can lend to borrowers. So, what they do is they don't unnecessarily approve any type of application. So, ina-assess pa rin nila kung sino-sino yung mga mangungutang, saan nila gagamitin, may potential ba na maging profitable yung paggagamitan nila, or do they think that it's not going to work? So, in that sense, i-reject yung investment. So, in that case, ina-assess nila kung aling projects yung mga provider ng loans ang magiging successful or magkakaroon ng high returns. Okay? Thirdly, bring into balance the supply of money with the public's demand for money. Kasi kapag masyadong marami yung supply of money compared to the demand, normally there would be inflation. Okay? And we don't want that to happen. So normally, ginagawa ng monetary board, yung excess supply of money, they would, retract that, or they would find a way to get that into the possession of BSP. Alisin sa market, pupunta sa possession nila. Okay? And then number 4, act as an important government tool through its influence on the volume of savings and investment. If the economy is growing too slowly and unemployment is rising, the government can use its policy tools to lower the interest rates in order to stimulate borrowing and investments. So kapag bababaan yung interest rates, may encourage mangutang ang mga individuals and businesses. And then yung inutang nila, syempre gagamitin nila for their operations, expansion, they would hire more people. So in that case, may stimulate yung economic growth, and then yung unemployment would go low, employment would rise. So tawag dito. And since they have more money to use, they could probably increase their production as well, right? So encourage production and create employment. On the other hand, an overheated economy experiencing rapid inflation calls for a government policy of higher interest rates to slow both borrowing and spending. Kapag masyado namang mabilis yung growth tapos nagli-lead na siya to inflation, they could, force it to slow down by increasing interest rates. Kapag mataas yung interest rates, madideter yung ibang businesses to slow down din kasi they can't borrow money from the banks anymore. They would slow down on their spending kasi they don't have another source of funding. Yung kung ano yung meron sila, kailangan nilang tipirin muna. Yan. So, yun. Mag-slow down yung borrowing and spending. So, there are a multiple of interest rates operating in the economy. Different maturities will bring different rates or yield. So, that's one consideration. Depending on short-term ba yan or long-term, yung security or yung financial instrument, pwedeng magkaiba ang interest rate na meron sila. However, we will assume that there is one fundamental interest rate operating in the economy, and we call this rate the pure or risk-free interest rate, which is in fact a component of all interest rates. Pero normally siya yung naka-base din sa government-issued securities. This rate is usually the one associated with government securities because government securities are generally risk-free, being guaranteed by the issuing government, backed up by its taxing power. This rate represents the opportunity cost of holding idle cash because the investor can always invest in these government securities and earn the minimum rate of return that it gives. Okay? Especially currently, binababaan na nila yung minimum investment to these types of securities, so more and more people can invest in them. Once this interest rate is determined, all other interest rates may be determined from it by examining the special characteristics and risk associated with the securities being analyzed, or for which the interest rate is being determined. Okay, so yeah. Normally, interest rate would also depend on the risk involved in the particular security. As aforementioned, the differences in marketability, liquidity, default, and maturity, some of the important factors causing differences in interest rate. Okay? So, ayun na. Tapos na yung second part. Ito na yung kasunod, third video na to. Later na lang. Okay, so I will end this one here. Thanks and bye.